Yeah, welcome back to the channel, the Daily Forex. Today's video, I'm going to show you guys how to trade Volatility 75 index with a powerful strategy that is almost 100%. Alright, this strategy is about 95% accuracy. I'm going to show you how you're able to, trade this market using this strategy. Alright, and I want you to pay very close attention to everything that I'm about to share with you right now in this video. Okay. All right, now first of all, I'm going to start with telling you guys the parameters for this strategy. So we'll go over to the parameters for the indicators. I currently use on the main window, put on the moving average, period 30, the shift 0, then the method is exponential, you apply to close. For the style on 2 pixel with color purple, then this first straight line here, then you click on done. All right, then for indicator window 1, you put on the relative strength index period 14, you add level 80, 20 and 50 for the description. All right, then the style, you put that on 4 pixels with the color black with this first straight line, then you click on done. Then the style right here on the main relative strength index first page, you put that on 2 pixels with the color blue, then this first straight line pattern, then you click on done as well. Then you put on the moving average after the relative strength index using the same parameters as the main window. Okay, period 30, shift 0, method is simple, apply to close, the same style for the parameters, then color purple, then you click on done. All right, then the last indicator you want to use is the MACD. Very important, the MACD. You put the fast EMA on 14, slow EMA 24, MACD SMA 10, you apply to close. For the main on the style, you put that on 4 pixels with color black. The signal, you put that on 4 pixels as well with color red. With this first straight line pattern here, you don't add any levels. Okay, then you click on done. All right, now this is the setup for this strategy. All right, you want to make sure that your chart is exactly the way mine is looking. All right, because a lot of people guess this wrongly. They don't set the parameters accordingly to the way I set them, so they have different looking on their chart. Okay, all right, now that we have done that, setting those parameters, now what we're going to do right here is to observe this market. First off, I'm going to clear all these lines for the object. All right, now while on the 1 minute time frame, I'm currently on the 1 minute time frame right here, and we know that this volatility 75 market is not like the boom and crash market, whereby you tend to see the market drops in price movement quickly. We know that this market is still volatile as the boom and crash market, but they are a bit they are different, right? So the way you trade this market is not the way you trade boom and crash, right? So now that we're on this market right now, we currently see that the pattern of the market right here, currently the market is going towards the downward trend, meaning it's going to the oversold position, right? Going towards the oversold region. Now we're going to take a look at this point right here. We're taking a look at a very important point, which is the overbought and the oversold. And as at this point right here as well, you want to take a very close, you want to pay attention to these levels 80, 50 and 20. They are very important, as well as the overbought and the oversold. So this, I say here as the 80 is going to be the overbought, the 20 is going to be the oversold. All right, now this is the moving average here in the indicator section, right? Not on the main chart, the indicator. Now this moving average, which is color purple right here, you can see that when it breaks through above the level of 80, which is the overbought, it breaks through, then you wait until it has broken down. All right, that's broken down below the level of 80. All right, the level of 80 of the overbought. When it breaks above the level of 80, then it should go down below the level of 80 before you place a sell. Remember, you're looking for a sell at that very point when it has gotten above the level of 80, you need to wait until it goes below the level of 80 again before you place a sell, because at that very point the market will start going towards the downward trend for a sell. All right, and when you're trading this type of market, you know that if you take a very zoom into this market, you can see that on volatility 75 the market sells, it buys, sell, just like this. But even though it's giving you that push quickly moving fast, it's still going towards the direction that is going to go. Okay, it's still going towards that direction. So this is whereby you hold into the market, and by holding into this market so that you'll be able to reach your goal, you should do proper analysis before placing any entry, either for a buy or a sell. All right, now let's zoom out a little bit. When you're trading this market, you do not zoom in like this. No, you want to zoom out. The first zoom, the first and second zoom. Now this is the first, 1, 2, 3. The first, second and third zoom levels. Those are the 3 levels you want to make sure that you trade on. Do not zoom more than the third zoom level, because if you zoom more than that, you will not be able to see the movement, the price movement on the chart, and you will not be able to get an accurate signal on the chart as well. So you want to trade on the first, second and third zoom level alone. All right, I hope you understand what I said. Right now we are on the second zoom level right now. The second zoom level, I hope you guys can see this clearly. We are on the second zoom level at this very point in time. So when I was saying that when the moving average crosses above the RSI level 80, when it crosses above, it has gotten over the overbought, because this is the point whereby I mark as the overbought. So when it crosses above, you want to wait until it crosses below before you place your sell, because if you take a look at this point as well, this is it here. It crosses at this point, you can see that it curves down towards this point right here, the level 80 on the MACD, which is the relative straight, the level 80 on the RSI for the indicators, right? So we know that these indicators, they lag a little bit. Yes, they lag, that is true and correct, because most of us might have experienced that. But this is the reason why I put the MACD, this is the reason why I put the RSI on the level of 80 and the level of 20 for the overbought and the oversold, so that it can be near perfect. Remember I told you guys that it's almost 100% accuracy. So we're going to leave that on 95, because basically there's no 100%, strategy. There's always a downside to it. So basically we're going to call this a 95%, because it's almost near 100% accurate, right? So here you can see at this point right here, it went straight to the oversold. It's sold. Even at this point right here, you can see that the pattern which is following right here is a sell, just like this, going straight forward. We can see that the moving average is about to curve towards the upward trend, and basically this is the reason. Take a look, the MACD that started to go upwards. Now this step, we're going to talk about the level 50. Now I just told you guys about the level 80, right? When it crosses above the level of 80, which is the moving average on the indicator section, when it crosses above the level of 80 and it breaks below the level of 80 before you place your sell. All right, before you place your sell, that is it. Then take a look. Then you can see below this level 50, there is a chance that the moving average will also break below the level of 50. Then it will curve above again. Let me show you what I'm talking about. At that point here, there's a scenario whereby it curves. Look at it here. It will break below the level of 50, then it will curve above the level of 50. So at this point, this region which we are seeing right here, when the moving average breaks below the level of 50 here, you wait until it crosses above again it crosses above, when you see that it crosses above, you place a buy, and that buy that you see at that very point is going to be a very short buy. All right, it's going to be a very short period of buy. And when you saw that it has gotten to this point here and the MACD retested, let's zoom in here. When you see that the MACD retested at this point here, you can see that the MACD it dropped this trade line here, this black one. Let me zoom in a little bit again. This one here, 1, 2, 3. You can see that they are the same size and the same range, right? But you can see that this fourth one here dropped below the level 50, below this level 80 here. You can see that it dropped. You can see they are not the same. Immediately you see a drop, know that the market is going towards a downward trend. So at that very point, you either take your profit from that buy or you place a sell entry for a sell. Okay, because if you zoom out a little bit, let's go back to the second zoom level here. You can see, because if you take a look at this point here, when it breaks above, you place a buy, take that small buy, then it breaks below the level 50, you place a sell, take that profit. It breaks above here, you can see. Okay, it breaks above here, you can place your buy, because you can see that it's going towards the upward trend. Then at this point whereby you saw that there was a retest, you exit. Okay, place your buy. Remember that here is the level 20. Okay, the level 20 here. It breaks below the level of 20, then you wait until it crosses above the level of 20 before you place your buy. It breaks below the level of 20, you wait until it crosses above the level of 20 before you place your buy at that very point in time. And whenever there is a downtrend of the MACD, the market always sells. Take a look here. Whenever there is a downtrend here, the market is going towards a downward trend. You see, at this point, the beginning of the downtrend of the MACD, the market start to go towards the downward trend. So at that very point, you can place a sell as well and take your profit after that. And when you're trading this type of market, you want to make sure that you do a proper analysis, a very good proper analysis on the market before you place each trade entry. And remember that the moving average need to cross above the level of 80, then you need to retest backwards and break below the level of 80 before you place your sell. And if you trace it down, you can see that when it breaks down towards a downward trend below the level of 80, the MACD is also going towards the downtrend as well. And when the MACD started to retest towards the upward trend, the market started to buy. There was a buy, started going towards the upward trend. You can see. All right, you can see, very accurate strategy. Now, what do you see here? This is where the market is right now at the moment. What is happening here now? You can see that the market have already broken below, which is the moving average, have already gotten towards the level of 80. So what do? You do not place a sell at this point. What you do is you wait until it has crossing above the level 20, then you place a buy. Because if you take a look at this point right now, the market has already gotten to the oversold. The MACD right now has started to shorten upwards, started going towards the upward trend. And immediately you see that at this point right here, it started to create an upward trend. The market started to buy. So you wait, like here, when it breaks above the level 20, when it breaks above the level 20, you buy. The same thing that's going to happen here. at this point in time, the market is going to buy. Alright, so I hope you understand everything that I've said to you guys, and also join our Telegram community, the Daily Forex on Telegram. Alright, so if you found value, do it to like and subscribe to the channel. I'll see you guys on the next video.